Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Tuesday, the 10th of March. I'm Daniel Lam, your host for the podcast. In my TV interview at the end of last week, I spoke about how various countries have their own idiosyncratic factors, which drives their markets, besides the Middle East conflict that has been influencing equities and risky assets globally. Now, in China, the National People's Congress is the key idiosyncratic factor. The GDP growth forecast is set at 4.5 to 5% for this year. The CPI target set at 2%, and the official fiscal deficit at 4% of GDP. Now, this growth target is lower than last year's 5%, but it is in line with our expectations. It is pragmatic due to the volatile external environment and domestic challenges, as China embarks the 15th five-year period with a focus on growth quality and risk control. Now, in order to overcome deflationary pressures, China is going to pursue moderately loose monetary policy. So this includes a flexible reduction in the reserve requirement ratio and policy rates in order to lower the funding cost while maintaining a stable RMB. Moreover, fiscal stimulus will be important. The target for the official budget deficit is at 4% of GDP. That pushes public budget expenditure to a new high of 30 trillion RMB. There is the proposed ultra-long special government bond issuance at 1.3 trillion RMB, aimed at supporting strategic security and infrastructure projects, as well as consumption and equipment upgrades. There is emphasis on growth through technological innovation, accelerating the development of AI open source community, semiconductors, biotech, as well as a low-altitude economy. Key areas of development include quantum computing, embodied intelligence, brain-computer interface, future energy, aerospace, and 6G. 200 billion RMB has been earmarked for large-scale equipment upgrade. Now, on the company level, the key technology stocks in China will be reporting in these few weeks, where we're expecting that to be supportive as China attempts to close the gap in AI development with the US. So all these factors lend support to the Hang Seng Index, which has undergone correction due to the conflict in the Middle East. It has been testing and found good support just above 25,000, and it can attempt to recover above the critical 26,500 level. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.